Welcome to Xcelerate with Shawn Redford. The Xcelerate Xcast is designed to provide Experior agents with simple, repeatable, and profitable strategies for you to grow your business. We will share ideas on how to identify ideal target markets and new opportunities, improve your conversations with proven scripts and storytelling, and finally, we'll also meet with industry experts and our partner companies to ensure we're up to date with the newest technology and insights, all so you're able to accelerate your growth. We hope you enjoy Xcelerate with me, your host, Shawn Redford. Today on Xcelerate with Shawn Redford, we have Andrew Oswald, Senior Director of Business Development at Beneva. Andrew began his career in the financial industry back in 2008 as an advisor with a large planning firm. After 7 years in a planning role, he made the switch to wholesaling and has been working to support insurance advisors ever since. As a Senior Director of Business Development with Beneva, Andrew is responsible for assisting advisors in growing their insurance practices and for fostering close relationships with distribution partners throughout Northern Alberta and the Prairies. Andrew has a BA from the University of Alberta, has held the CFP designation since 2018, and is currently enrolled in the CLU designation program. Andrew lives in Edmonton with his wife Pamela and their 4 children, and when he's not working with insurance advisors, he can be found on the ice coaching with minor hockey programs in Edmonton. Let's hear from our good friend, Andrew Oswald. And welcome, Andrew. Thank you for joining us today. Andrew Oswald from Beneva here to talk to us today about disability insurance. As our viewers will know, we're focusing right now on 3 marketing campaigns: disability insurance, critical illness insurance, and insuring the lives of children. But today, although Andrew could talk on any of these topics at length, today we've got him focusing on disability insurance. So first of all, welcome, Andrew.
Thanks for having me. I appreciate the invitation, Shawn.
Well, and we appreciate the incredible support that we've received from Beneva, from the wholesaling team all across the country, from the leadership. It's been a great partnership. You were one of our biggest partners now for the last number of years, and we really do appreciate all of the support that we get for our agents on the ground at the conventions and everything. So again, thank you so much.
Well, that one's an absolute two-way street. We very much appreciate everything Xperia has done with us, and it's been a great year, largely due to the efforts of Xperia. So to you and your team and your advisors, thank you. So
it's a win-win partnership, right?
It is, absolutely. Absolutely.
Now, I have the luxury of knowing you in my previous life, but some of our audience probably doesn't. So I like to usually start off with just, what was your foray? Did you always grow up wanting to get into the insurance business? Or, what's the quick Coles Notes version as to how you got into the insurance business?
Well, it's funny because I've been in this industry since 2008, and I do think every time I talk to somebody about how they got into it, it's always sort of similar story in the sense that completely by accident. It wasn't intended. It wasn't really what they were going for until something happened. I had one of those typical stories that you hear that are strictly motivated financially, and it sounds terrible to say it, and I almost hate to admit this, but it was absolutely one of those things where I saw somebody driving a really nice car. And I said, "Hey, what do you do?" At the time, I was an electrician. I was a third-year apprentice. Got into the job because my dad was an electrician. Both my brothers were electricians. It was kind of the family business. It was just the thing to do. And I never wanted to do it and didn't enjoy it.
Yeah.
Saw this person driving a beautiful, brand new BMW, little 2-door coupe, top down. And I thought, man, that's nice. So asked her what she did. She told me about the industry. And I thought, let me look into that a little bit more. I, of course, at the time thought you needed to be, needed a finance background or needed a degree in something. And so I didn't think it was really an area that I could pursue, but I thought I'd check it out. And as they say, the rest is history. So I started with a firm, worked with them for a few years, realized it wasn't quite the right fit for me, and moved on from there and ended up in the wholesaling world, and have been doing this ever since. So so like I said, since 2008, I've been in the business and have had plenty of experience with everything from investments, life insurance, living benefits insurance. Critical illness was always something that was a big, a heavy focus for me for the last number of years, as is disability insurance and the other, living benefit type products.
And it's interesting you say that, because as we were talking about earlier before the call, as we were preparing for this, A lot of our industry doesn't focus on living benefits. They focus on life insurance, the glitz and the glamour
Yep.
of the life insurance sale, as well as the investment side of the business. But rarely do agents focus on living benefits. Why do you think that is?
You know what? I really think it's just a misunderstanding of what the products are, or rather a lack of understanding of what the products are. Life insurance, somebody explained to me life insurance when I first started, and they said, life insurance is easy. You poke them with a stick. If they don't move, they qualify for a claim, they get their money, and that's the end of it. With living benefits, it's a little bit different. And people look at it and they go, oh, shoot, I'm going to sell this product to my client. And then they're going to get sick and they're going to come back and say, hey, well, you sold me this contract. What if it doesn't pay? Right? Or they become disabled and they come back and they say, look, I can't work. And what if it doesn't pay? They hear things like integration and coordination of benefits, and they start going, oh, you know what? Like this is a little bit more
It's
complicated.
too complicated.
It's too much. And there's always that fear in the back of their mind that, I'm going to put this in place and then it's not going to work.
Yeah.
And largely the reason why sometimes these things don't work is because the client didn't understand what they were getting, or the advisor didn't totally understand what they were selling. And so we need to educate people a little bit more on that. But the vast majority of the times that you hear these stories of these products that don't pay out, it's because they were sold as they were sold as an add-on to a mortgage, for example. Oh, get the mortgage, we'll just sign that piece of paper. You've got coverage now. You're covered for anything. You get sick or disabled, it's going to pay. There's no explanation as to what it is or what it covers or how it works. It's not sold by somebody who's a licensed agent or a licensed advisor, and the clients don't know what they have. So, I do think a lot of that type of history is what scares people away from getting into this. Whereas the reality of it is if they learn about the products or they learn about how they work, it opens this whole range of doors of clients that nobody's ever talked to about this stuff. And it's such a low hanging fruit that people don't even realize it's there. And they step right over it to go to the life insurance because it's easy to explain. If I poke you with a stick, you don't move, you're going to get your money.
Yeah.
Right. So that's part of why I think people don't get into it. I don't think enough advisors talk about living benefits in general.
Yeah, I think you're right. It starts with education. We need to do a better job as an industry,
Hmm.
as an organization, educating our agents as to the importance of the product for the client, but also for the advisor. You said something really interesting there. It really does differentiate the advisor having these
Absolutely.
conversations because the clients have not heard of critical illness insurance or disability. They've heard of disability insurance and they probably have it through their group plan. So they think that that's enough.
I think they're covered.
Yeah,
Yeah.
absolutely. But they don't realize the limitations, whether it's, the length of coverage that they have. Maybe it's a 2 or 5 year plan, or perhaps it's, um, you know, what qualifies as being disabled. And I think, when I ask advisors how they differentiate themselves from other agents or other advisors in the industry, a lot of them will say, well, I give superior service, or I've got this designation, or I'm an independent advisor. I can shop the market.
Hmm.
That's what everybody is saying. You're just repeating what the guy next door said to your client the last time they were
Yeah.
interacting, right? So,
Yeah.
how are you differentiating yourself? One of the easiest ways is just to talk about living benefits products and make it clear to the client that it pays out, but not for a cut on your arm. Like, these have to be life threatening in the case of critical illness insurance,
That's
life
right.
threatening illnesses, or in disability insurance, you can't go to work. And that's the problem with disability insurance, which I'll admit, I'm sure you'll admit too. The claims process can be challenging because the
Yes.
client and the doctor might say that they're disabled, but the insurance company may argue sometimes that they don't qualify. They're not disabled enough. And again, it goes back to education, making sure that the right product has been sold with the right definitions and all the
Yes.
bells and whistles that need to be there. And that's why this program is being created, so that we can have these conversations, we can bring this to everybody's attention.
Which is excellent to see. I absolutely love that you're doing something like this, because one of the things I run into quite often, now I shouldn't say I run into it quite often. I have run into it in the past, and I can see it being an issue in quite a few circumstances. And that's where somebody has a product like a simplified accident only disability contract or an accident only disability contract, and then the client is disabled through a sickness or something that would be classed as a sickness and they don't qualify. Like I said, I ran into that in the past, and part of the problem that I see is oftentimes because of this fear or lack of understanding of the product, quite often what we run into is, well, I'm going to use the simplified issue disability because it's quick and easy. There's no underwriting. We just get it in place. It's quick. It's done. Very true, but it's quick and done for a very specific circumstance, and it doesn't cover the other things that we may want to have covered. So that would always be kind of my first stop, I guess, when I talk about disabilities, the difference between an accident-only contract
Yes.
and an accident and sickness contract, and what they cover, and why we would want to look at one versus the other, or when we might want to look at one versus the other.
Absolutely. Great point. Now, you also mentioned earlier that you have had an interest and even specialized to a certain degree in living benefits products in the past. Is there any reason why you decided like that was an area that you'd focus on outside of other opportunities?
It really was, it started out with just an experience I had. So, I started, like I said, I started with a firm, and of course, the firm I was with, we had a focus most heavily on investments. So my focus was always kind of investments to start with. And then as you start going through it and you start building plans out for clients and you start working more, you start introducing some of the life insurance. And, it was those easy conversations. It's, if you pass away, are your wife and kids going to miss the income, or is your husband and kids going to miss the income, or or is there going to be debt that needs to be paid off? And so it was pretty easy to get those conversations in place. And I think what happened, well, I know what happened was we originally were doing a living benefits campaign. There was a campaign happening where, if you could have every living benefit application that went in, you were entered in for some draw. And it didn't matter if it was a standalone product or if it was a rider on something. And I had done a few living benefit contracts before that. Don't get me wrong. I'd done a few before that, but one of them I put a disability rider in place for this client, and he was a younger guy, not super young, but you know, young enough that he wasn't overly concerned about disability insurance, but old enough to go, you know what, something might happen, something could happen.
Yeah.
And so we went through the underwrite. We got the rider in place. He went through the underwriting. We got it. We got everything sorted out. He had a life insurance contract with a disability rider. And honestly, it was one of those things where you just don't. It sounds almost fake. It was literally 3 weeks after that contract settled. I get a phone call from him. He was not a skidooer. He had never skidooed before in his life, but a buddy convinced him to go out skidooing. He rolled his skidoo and he broke his pelvis. So major fracture. He was going to be off work for months. He worked in construction. He was going to be off work for months, going through recovery. And of course, we had just put this disability rider in place. It was within the 2-year contestability period, so of course it took a little bit longer for that one to pay out. But he ended up getting all of the back pay that was missed while it went through the underwrite or through the claims process. He ended up getting a claim for a few months while he was going through this treatment and healing up from it. And it was literally 3 weeks after that contract was settled, and this fellow, through no fault, well, I shouldn't say through no fault of his own, because he probably shouldn't have got on the skidoo, but through something that was completely unexpected.
Yeah.
He had an accident and was disabled, so he was able to claim on it. My first experience with critical illness insurance actually was one that wasn't even my contract. I didn't even sell the contract. I had inherited this little book. I had a couple of life insurance and little critical illness contract in it. And this one client, I could not get a hold of her for the life of me. Tried and tried and tried, and eventually just got put in a drawer. And I said, okay, well, if she ever phones me, that'll be that. I get a phone call one day out of the blue, and she says, I've heard your voicemails. I see your name on my statements. I'm pretty sure I have a sickness policy, and I was wondering if we could take a look if I qualify. So this woman had actually, what ended up happening was she was diagnosed with cancer, and it was a fairly rare and not particularly treatable form of cancer. And so she had a little $25,000 CI contract. It was still in force. We put in a claim. She got her claim, and that was kind of the end of it. I hadn't heard anything else about it. And then about a year later, I got a phone call from, turned out to be her daughter, and she had passed away. They had a little bit of a life insurance benefit that had paid out. And when we were talking, her daughter mentioned this critical illness contract, and she said, "Look, I mom got this claim, and we took the $25,000, and we spent 3 months traveling in Europe before she got too sick to be able to do anything. We bought some video recording equipment. It was her and her sister and their mom. Bought some video recording equipment. This was a number of years ago before everyone had it just on their cell phones.
Yeah.
So they bought some recording equipment and some editing software, and they made this little documentary of the 3 months that they traveled through Europe with their mom.
Oh,
And she had since passed away, but they had this little documentary of this last time that they were together. And so, it was one of those things where I really looked at it. And up to that point, I was kind of like, who needs critical illness insurance? We live in a country where, your medical's paid for, your healthcare's covered. And yeah, that's all true, but nobody's paying for the extra stuff. Nobody's, we all talk about all the extra care and we talk about being able to leave the country to go for treatment. I don't think we talk enough about the freedom that comes from having a little bit of extra cash when you know that your time might be limited and you want to do some of the things you want to do. Because if somebody told me I had 6 months to live, I guarantee you going to work the next day, even if I'm capable, isn't what I want to be doing.
nope.
Right.
Nope.
And so that's where my focus on living benefits kind of started from, was I had that disability accident right after putting it in place. And I've had a few other claims, and it's interesting to me how many times I've had a claim happen very shortly after it's been put in place.
Yeah.
And then I've had a couple of critical illness claims that have been pretty significant.
I mean, I always find the most powerful stories, well, storytelling in general, is how you sell insurance products.
Absolutely.
All of them,
Yeah.
as far as I'm concerned. But I think stories that talk about claims experience are really the most powerful. And even the claims that sadly didn't happen, those are both great stories. But I've had stories where agents have tried and tried and tried to get an appointment with a client to talk about
Mm-hmm.
critical illness insurance, and it was put off, put off, put off. And then all of a sudden they get the call one day saying, listen, I've got cancer. Can we still do that critical illness insurance thing that you were talking about? And unfortunately, no, we can't.
Yeah.
But it really, until you are faced with the reality of our morbidity, the
Mm-hmm.
fact that we do get sick, we do have disabilities, we do suffer life-threatening illnesses all the time, and it doesn't discriminate. Your friend on the Skidoo, and for our American friends that might be turning in, a Skidoo is a snowmobile. Um,
Yes, I forget it's a brand name, right? That's
yeah, I don't want them thinking that it's a dog sled or something, right? So they're very different things. But it's these stories that really resonate with clients, and appreciating that whether it's disability insurance or critical illness insurance, they're not there to make you better. Like our healthcare system, to your point, is there to make you better as best as they can. These benefits are there for your quality of life, for the quality of your recovery, for the benefit of your families. Like it goes so far beyond just getting you through that ailment. It's Keith Leach talks about it all the time. These products give you choice, they give you independence, they reduce stress. Everything that they do is designed to help you recover on your terms as well as you possibly can. And that's why I think that's the message we should be conveying to our clients and our agents, is that that's what this does. It allows your clients to maintain their dignity and the quality of their life as best as possible at the hardest time in their lives that they're probably ever going through.
absolutely. Yeah.
All right. So now you've got tons of experience. You've worked with agents all across the country. What are some of the strategies that you've learned from your agents or from yourself in the field as to how to open up the disability insurance conversation? I mean, if all I've ever talked to you about is life insurance or investments, how do I make that pivot into disability insurance?
Disability. The absolute easiest one and really the most effective from what I've seen uh, is when an advisor is sitting down with their client, or when an agent's sitting down with their client, if they simply ask, I'm gathering information to help build a plan for you. Can I take a look at your group benefits booklet? Can I take a look at your group disability plan? Because one of two things is either going to happen. Either they're going to say, sure, and they'll find it for you, or they'll, take a while to get it, but eventually they'll get it to you. Or they'll say, I don't have disability, or I don't have a group benefit plan. Both of those are great conversation starters to the disability topic, or living benefits in general. The first one is, if they bring you that plan, I can almost guarantee it. Now, can't always guarantee it, but I can almost guarantee they have absolutely no idea what they actually have for disability coverage. None.
Absolutely. Yeah.
Right? The number of times I've had somebody say, oh, no, I'm good. I'm covered. I have it through work. And then you get their disability plan and you're looking at it going, well, you have short term, you don't have long term. or you have long-term, but you don't have short-term, or it's limited to $2,000 a month of income, or it's, 66.67% of your first $2,000 and 50% of the next $2,000, and then X percent of the rest, and they're making $150,000 a year, and their disability benefit is a fraction of what they think they're going to get. So it's very easy to start that conversation with people, which is 95% of the battle right off the bat. This is relating to critical illness insurance, not disability insurance. But I was chatting with somebody one day, and I just said, we were just talking. It was a friend of mine. We were just kind of having a general conversation. I said, if somebody had critical illness insurance in place and they were diagnosed with cancer, they don't have to worry about it. And his jaw dropped, and he goes, "You mean I can get cancer insurance?" Like, he didn't even know that it existed. And I know people know that disability insurance exists, but a lot of times they're not aware that they can actually get their own. They think it's part of a group benefit plan, so they either have it or they don't have it. Well, you have it, but it's maybe not what you think, or you have it and it's maybe not as good as you thought. And so let's take a look at what we can do to maybe top it out or flesh it out a little bit. The other thing that's going to happen is they're going to say, "I don't have one." Well, now that's a conversation we really need to have, because we talk about life insurance as though, what would your family do if you were dead and that income wasn't there anymore? But we don't talk about disability insurance as, what would your family do if you were disabled and that income isn't there anymore and you're more expensive than you were before?
Yeah.
Right? Because not only are you not bringing, at least when you're dead, you're not eating, you're not using the water, you're not, you're not causing an expense. The funeral expense, yes, that's done. As far as the day-to-day expenses go, you're not contributing to that anymore.
No.
If you're disabled, you're still contributing to those expenses, and there's still no income coming in. So for the exact same reasons we would put life insurance in place, we need to talk about disability insurance. And the easiest way to start that conversation is just to say, "Hey, let me see what you've already got." Because they, like I said, they either don't have it or they don't know what they have.
Yeah. And arguably, there's a greater chance that you're going to be disabled than die.
Oh, hugely.
So, I mean, it's that much more important to at least have the conversation with your clients about it. And it amazes me how many agents, on whether it's on their website, on their social media platform, or on their business card, says, "I offer life insurance, critical illness insurance, disability insurance," and they're listing this laundry list of things that they offer. But do they really offer it? Are they actually having these conversations? And I would argue you're putting yourself at risk if you are saying that these things are all available, but you're not actually having conversations with your clients about these things. That screams liability to me. Like, that is your job. If you say that you're selling this, sell it, talk to your clients about it. And if you don't want to have the conversation, don't promote that you do, or better yet, partner with somebody who can have these conversations for you and split the commission on it, right?
I would say that absolutely. I want to echo that last comment about partnering with somebody who does, because it's one thing to say, "Well, I don't talk about that." But if you're ever in a situation where a client has come back to you and is now disabled or critically ill and says, "You never told me about this. You never talked to me about this being an option." Best case scenario, you feel terrible that you didn't have the conversation with them. Worst case scenario, you also then get a call from their lawyer, right? And or something similar. You're making a call to your insurance coverage because you have an issue that now has to be dealt with. At a bare minimum, I've seen advisors have, they have their reason why letters, they have their, their service offering letter or whatever it is that they want to do,
where it says
their disclosure documents, and it says right on it, investments, retirement savings, emergency savings, life insurance, critical illness insurance, disability insurance. And at a bare minimum, to be able to say, "Hey, I want to talk to you about disability insurance," and the client says, "I don't have any interest in talking about that," fine. If you become disabled and you no longer have an income and you can't support your family, that's up to you. But I need you to sign off that we had this conversation and we had the opportunity to talk about it. And I do think in most cases, there's obviously exceptions to every rule, but in most cases, you're going to sell more just by bringing it up. You don't even have to have any special skill or technique or strategy. Just talk about it.
Just talk about it. Just be open and honest. And I agree wholeheartedly. And especially the ones that call themselves planners. And now, there's title protection in Ontario and probably eventually the rest of the provinces. So, only certain people can call themselves planners, but a lot of our agents, advisors, not just at Experior, but at all industry partners
Yeah.
and MGAs, they're all saying that they're planners and that they offer all of these services. We're really hurting ourselves, the reputation of the industry, by perpetrating this when it's not the case. So if you say you're going to do something, I mean, that's the premise behind good experiences and good marketing, do
Yeah.
it. And in our case, if you say you're going to be offering services, at least have the conversation, open up the door to the conversation. I agree wholeheartedly. So we spent a lot of time chit-chatting about the industry, about why DI. I'd love to give you and Beneva an opportunity to highlight, like, why Beneva. So first, let's talk about Beneva. As we've already addressed, many of our agents are very familiar with Beneva,
Yeah.
but many are not. So what's the quick, like, why Beneva?
Well, Beneva is the newest old company in the industry right now.
Yes, for
So
this week anyway.
for this week, yeah, that's right. That's right. For people who aren't aware of Beneva, and as you mentioned, most of your advisors will be familiar with us, at least to some extent. But for those who don't know Beneva, Beneva was born through the merger between SSQ and La Capitale, and SSQ and La Capitale have both been around since the 1930s. Like these are long-standing Canadian companies, both originating in Quebec and moving out across the rest of the country. Only just merged formally to become Beneva in 2021, and only just started both companies using the Beneva brand and name earlier this year, beginning of 2023. So, like I said, we're one of the newest old companies out there. We've been around for a long time, just in a very different form. That being said, with this merger, we've also become the largest mutual insurance company in the country. So we are now a very, I shouldn't say a very, but we're a quite a large company, and we're very strong and stable in that sense. So it is something a lot of people maybe aren't as familiar with. We're definitely in a period of transition and some change happening with this merger. But with that being said, the future is very bright, and there's a lot of wonderful things coming down the pipeline with Beneva. So if you haven't looked at Beneva before, it's worth taking a look. It's worth taking a look. We do
Absolutely.
have a pretty good product shelf across the board, not just on the disability side.
It is a pretty full product suite. And on that note, it's a great segue into the disability insurance product because it's a dying breed in Canada. We've got fewer and
Yes, it
fewer
is.
companies specializing or offering, forget about specializing, offering
Yep.
disability insurance. A lot of companies have gone to these disability riders
Hmm.
as opposed to a standalone disability product. And we'll talk about the disability rider product later because I think it certainly does have its place. But today, I want to focus on the disability insurance product and actually insuring individuals specifically for disability insurance. So, what can you tell me about the disability lineup offering at Beneva?
So Beneva's disability lineup is called the Pillar Series. So we've got a series of disability products we can look at. Now, I will just mention this, depending on when you're watching this. If it's recorded, you may be watching it after the fact when it is all Beneva. But currently, the Pillar Series disability is still branded as a La Capitale product. Now that is changing. We should see it change beginning of 2024. So we should see that change happening right away, where it becomes that Beneva branded product as well. But for all intents and purposes, it's still our Beneva disability line, and that's what we're going to carry over. But for the time being, at least, and we may add some additional things to this and what have you. But what we have at the moment is we have our Pillar Series disability, which is an income replacement product. So it's full, it's accident only at its base, but it can be made into an accident and sickness product. We have the Pillar Series simplified accident only, which is a quick issue, simplified issue, accident only product. We have our Safe Driver, which is specific to individuals who are disabled in an accident, a vehicle accident. Great for younger new drivers or elderly clients who wouldn't normally qualify for disability product. And then we have our Hospital Care, which is a daily benefit if a client ends up hospitalized. I always say to people, we've got these four products. I do want to talk about our disability rider as well, which is a
Oh, absolutely.
separate animal altogether, but in my mind, a very, very useful tool. Um, we do have the four pillar products, but I like to focus most exclusively or most heavily, I guess, on the income replacement, the accident and sickness specifically product. And the reason why is, like I said, I've run into a number of cases over the years where somebody has said, well, my client had whatever, not necessarily a Beneva product, but they had a product from somewhere and they became disabled and they wouldn't pay out. And that insurance company is a,
Four-letter word.
expletive and exactly. And when you look at the product that they had, 9 times out of 10, the issue that came up was that they had an accident-only contract and they were disabled for something that came from sickness. And so with the Pillar Series income replacement, we have the ability to add the sickness rider, which covers a client then for everything. It's accident and sickness coverage. We have a number of riders we can add onto it to really flesh it out. So you can take what's essentially a pretty basic product and you can build it into something that is very suitable for your client. Now, I've heard people refer to, disability insurance as kind of being like a buffet where you go and you pick and choose the bits and pieces that you want. I was thinking about it the other day. I thought buffets, you pay the same price at a buffet and you go and you pick what you want. And I was thinking it's more like a Build-A-Bear workshop. I don't know if you've ever been to a Build-A-Bear.
I
I've
have.
got
I have.
I've got 4 kids, so I've been to a
Yes.
few of them. You go in there and it's like, okay, you pick the bear you want and you get it stuffed, and then you pick all the accessories that go with it. And by the time you leave, depending on the child you're buying the Build-A-Bear for, it could be a $20 experience or it could be a $200 experience. But the one with the $200 experience is coming out with this bear that's got hats and Oiler jerseys. Sorry, I'm from Edmonton, folks.
Yeah.
Oiler jerseys. Where they're decked out in all the gear. And the one who it's $20, they've got a plain bear, maybe with a pair of sunglasses.
Yeah.
It all depends on what you need and what you want, and you can build it however you need it to be. And that's one of the things I really like about the Pillar Series income replacement is you can build this contract into whatever your clients need. You can have a 2-year, a 5-year, or to age 65 benefit period. So the benefits are going to keep paying longer if your client is concerned about that. You can do a 30, 60, 90-day waiting period. So if they can wait a little bit longer before they can make a claim, we can actually keep their premiums a little bit lower. We can add, like I said, we can add that accident, right? We can add all these things to it to build a product that's actually going to cover them for what they think it's going to cover them for, so that when they phone you and say, hey, I injured myself or I've been diagnosed with this and I can't go to work, you can be confident in saying, great, let's get a claim in because you've got that contract that we put in place and we'll make sure you still have an income.
Yeah, I just, for the benefit of our audience, I'll mention a couple others. The cost of living adjustment is available. Return of premium is available. What was
Future
the other one?
insurability option.
Future insure. That was the other one that I was thinking of, so that you can increase the coverage as their income increases over time. To your point, there's so much flexibility that you can build into this plan, and understanding that, in my mind, the whole discussion around disability insurance starts with their budget and their cash flow first.
Yes.
Because that's what you're protecting, right? And that's why I think it's so important to start the conversation with, what are your expenses? What would this benefit cover in the event of, heaven forbid, a disability? So you've already had a conversation about their budget. You know how much disposable income they have. Now you can talk about how much of that disposable income do you want to invest in protecting the chance that these expenses can't be paid with your regular income.
Yeah, exactly. And that's the thing, right? So that's why I like to focus more on the accident and sickness one, on the Pillar Series income replacement, because like I said, more often than not, the reason a claim isn't paid is because they're disabled due to a sickness, but they're trying to claim on an accident only contract. So if we cover both of those, we cover that range of possibilities. The second one is the simplified accident only. And what I like about simplified accident only is that it is simple, right? The underwriting process is basically, are you a Canadian citizen or permanent resident? Are you currently employed, essentially? And do you have a current disability that's limiting your ability to do that job?
Yeah.
I'm paraphrasing, but that's basically it. It's 3 questions. The downside to it is you don't have that sickness protection. However, with ours, we do have we have some limited soft tissue coverage built into that simplified accident. So if somebody does, tear a rotator cuff or develop carpal tunnel syndrome, they'd have the ability to have some coverage. It's not going to be as full as the sickness coverage. It's not going to cover, if they have a heart attack and can't go back to work for 3 months, it's not going to cover them in those cases. but it is going to cover that individual who maybe doesn't qualify for sickness benefit. And I think that's where that simplified accident really comes into play, is if you have a client who maybe has a health concern that renders them uninsurable from a sickness point of view, simplified accident only is perfect because we're getting something in place. It's better than nothing. I had a client a while ago, a number of years ago. He wasn't one of my clients. He was an advisor's client, but somebody I had helped with getting the policy in place. He had a health issue, couldn't qualify for sickness benefits, so we put an accident-only policy in place. He was loading some stuff into the back of his truck, stepped funny and stepped right off the back of the truck, fell and shattered his femur. Again, major break. He was off work for a while. He didn't have sickness coverage, but in this case, he didn't need it. It was better than nothing, right? We could have said, "Oh, you don't qualify. We're not getting you anything." He wouldn't have had coverage. So
That is so important to know. And so I apologize for interrupting, but I think this is really critical. If an agent is meeting with a client and they're not sure what product they're going to qualify for based on the information that they've obtained in the field underwriting that they've done, what should they do?
first step is, I'd say, reach out to your local wholesaler. We've been around. Most of us have been around long enough. We've been in the roles long enough to, in a lot of cases, be able to look at it and say, you know what, you're probably not going to qualify for this. We could look at that. Now, there are situations where somebody will throw a medical term at me that I've never even heard of, let alone know how it's going to impact the client. Sometimes I can figure it out by, Googling it
Quick
and
Google search, yeah.
deciding, okay, yeah, that's probably going to be an issue, or maybe it won't be. But we also have the ability to send it to our underwriting team. So you can reach out to us. If we don't know the answer right off the top of our head, we can send it to the underwriting team. I do ask, though, that if you are sending it, send it to your specific local wholesaler. I know we have, there's, was it WhatsApp?
Yep.
There's the WhatsApp systems, which are great, easy way to get information out. But sometimes then you're looking at it going, okay, well, I don't know what part of the country you're in. We don't have it in writing. So if we have something that we can forward to an underwriter, that works really well. And we need some detail, to say, my client has cancer. Is he going to qualify? My client had cancer 6 years ago. It was stage 1 melanoma. It's been treated. He's had no reoccurrence, etc. That gives us a lot more information to take to an underwriter.
Yeah.
So that's just one example, but if you can provide some details, send it to your local wholesaler. They can find out for you. Or if they, in a lot of cases, we can actually tell you just by looking at it.
Yes. Please, agents, don't litter the WhatsApp group with back and forth conversations about the ailments. Go directly to your wholesaler, send them an email, and you two have a conversation directly between the two of you.
It makes it easier just to keep track of it too, right? Then it's certain
absolutely.
that we can get back to you and make sure that the answer is coming from somebody who can actually, we can get it to an underwriter who can get back to us. And then we also have that trail, because if you go to send in an application and you can take that email from the underwriter that says this would likely be approved standard and put it as part of your application, it can make things a little bit easier down the road.
Absolutely. So one more question regarding the product, and it's the most technical question we're going to have today, but it's important, I think, for agents to understand the difference between guaranteed renewable and non-cancelable insurance. And just while you're refreshing yourself there, I just want to say thank you for reminding me about Safe Driver. I've got 3 drivers in my household that I need to get on that myself. So thanks for the reminder. I'll be going on to the beneva.ca site after this call.
Yes, absolutely. 16-year-olds who are driving, or young drivers who are driving themselves, or riding around with friends who are new drivers. It's one way to put a little bit of coverage in place on them, right? Because most 16, 17-year-olds don't qualify for disability insurance because they don't have that kind of an income. But easy way to do it. But yes, I do want to get back to your question about the difference between guaranteed renewable and non-cancelable disability insurance, because that's a question that comes up all the time. And, it's like anything. Some people will say to me, well, what's better? Well, like anything, it really depends. There's certainly circumstances where I would say, you know what, you need to look at a non-cancelable product. There's circumstances where a guaranteed renewable is probably the better option for your client, depending on what we're looking at. So the difference essentially is when you look at what's called a non-cancelable product, it's exactly that. Once that policy is in place, once that once that policy is settled and in force, the insurance company has no ability to make changes to it. It is non-cancelable. We can't cancel it. We can't change the premiums on it. We can't change the definitions. We can't do anything. It's in force.
Yeah.
With a guaranteed renewable, we can't change anything with the exception of we could change the premiums on an in-force block of business. Now, I say an in-force block of business because we couldn't say, hey, Shawn, we want to jump your premiums up because, for whatever reason, we're concerned about you. We could say, all 2As are getting an increase in business. All, all nurses are getting an increase in premium. But generally speaking, that's the only thing that can be changed on a guaranteed renewable versus a non-cancelable. Now, you might say, well, that's a no-brainer. Then why wouldn't I go with a non-cancelable where nothing can ever be changed? Well, the biggest thing is that a non-cancelable is typically going to be 20 to 30% higher premium to start with. Yep. So let's look at it this way. We're going to take something that's 20 to 30% lower in premium and could possibly face a 2, 3, 4% increase in premium at some point down the road. But we're saving 20 to 30% to start with. Okay. So that's the first part. The second part is the insurance industry is not particularly interested in increasing the premiums on an in-force block of business. Because what happens, let's say, for example, I phone you up, Shawn, and I say, hey, Shawn, you're part of this group. They're increasing the premiums on that in-force block of business. If I'm your advisor, what's the first thing I'm going to say to you?
We should look around, shop around.
Let's see what else is out there. And so as an insurance company or as an insurance provider, if we've got an in-force block of business that we're increasing the premiums on, those advisors are then reaching out to their clients and saying, let's see what else is available. And guess who leaves? The healthy people, the ones who still qualify for disability insurance and who still qualify at a preferred or standard rate. So essentially what's happening is we're losing our good risk when we do that. And what we're left with are the clients who maybe are already on claim or now have had a health change and are no longer insurable or would be rated and can't afford to go somewhere else. So we're losing our good risk. We're keeping our, I don't want to say bad risk, but our bigger risk, right? And then what happens is all of a sudden we're going, we got to increase our premiums again because we're paying out more claims. Well, then our clients who are rated leave, and now we're only left with those who are still on claim. So you get into this kind of death spiral where you start increasing premiums, and the people you want to stay leave, and the people you don't want to or not you don't want to stay, but the people who are already costing the company, claims dollars, they're less profitable. But the ones who are already claiming are the ones who are left. And really, with insurance, you're spreading that risk out over a pool. So we need that pool.
Yeah.
So like I said, we're already talking about a lower cost. So if we did increase it, it still isn't going to be the same premium as it would be with a non-cancelable product. But we're really not interested in increasing that premium. So the insurance industry as a whole, when it comes to disability insurance, is not looking to increase those premiums. They'll do everything they can to keep them from changing. So it's a very small risk. I don't want to say it's never going to happen, but the probability of it is not particularly high.
Well, I think I won't have you say these words, but I'll say these words. In over 50 years, it hasn't happened at Beneva. So never say never, but.
Well, and that's it. And like I said, it's really not in any company's best interest to do it.
No.
So
I think that's why we see companies leaving that part of the business rather than playing around with pricing because it's already price sensitive, right? So I think they'd rather just get out altogether, which is what we've seen in the last few years.
And like you said, we've seen a number of companies leaving, and I've had a conversation with a few other people. I won't say what companies or even what positions they were in, but I've had conversations with people who are also involved in the disability space. And one of the comments we've heard is that, or that I've heard, is that some of these products that are non-cancelable are costing these companies huge amounts of money.
Absolutely.
And they can't make any changes. We're not in the market to make changes. We don't really want to, but if we had to, we could, and that's why the premiums are lower, and it's a product that's likely going to stick around.
Yeah. So let's finish off quickly with the disability insurance rider, because I think it's a unique product with a few carriers, Beneva being one of them that's, got a great lineup. So why don't you tell us a little bit about that?
Well, as I mentioned, my first disability claim was off a disability rider. I also think it's the easiest way to start talking about disability insurance. What I like about it, what makes it easy, aside from, hey, we can add this to, cover your debt. So our disability rider is a debt protection rider. So it'll pay debt payments in the event of a disability. What's nice about that is it's not integrated or coordinated with anything else. So integration and coordination, for those of you who are new listening in, who maybe aren't familiar with what integration and coordination is there's a certain amount of income that can be replaced through disability insurance. And so if you have 3 different companies that you've bought disability insurance from, and at time of claim, you say, okay, well, I'm going to go and I'm eligible for $3,000 at each one. I'm going to put in my claim. What happens is those disability companies will all say, okay, well, let's see what else you have. And they're going to integrate or coordinate those benefits to make sure that you're only collecting as much as you're able to. So usually that's about 66.67% of your pre-disability or pre-tax pre-disability income. So we're looking at ensuring that we're not giving people an advantage to being disabled. We want to make sure that they're protected, but we don't want it to be more lucrative for somebody to be disabled than to be at work.
Yeah, there has to be an incentive to go back to work.
That's right. With the rider, though, because it's specifically a debt protection, it's not integrated or coordinated. So you don't have to worry if somebody says, look, I've got group benefits. I can't find my booklet. I don't know what I have. I can't be bothered to track it down. You're not worried about there potentially being some integration and coordination. Or you can put a disability rider in place. It's going to pay their debt payments for them, which is not actually paid to the lender. We're not paying that to the mortgage company. We're still putting it in their bank account, and they can use that money then to pay the mortgage, but it's related to that amount that they're paying. So they can use that money for anything they want. We used to have the ability to put it in place with proof at time of claim. So you would say, okay, well, I have $3,000 a month in disability benefit today, or in debt payments, I should say, today. And at time of claim, I need to then prove that I have those $3,000 of debt payments in order to get my $3,000 benefit. The pros and cons to that are, I'm paying a little bit less for it because I'll prove it at the time. I don't have to go and find my mortgage statement. I don't have to do any of this stuff. We just put it in place. The downside is maybe I've refinanced the mortgage in the meantime, and now my payments are $1,500 instead of $3,000. Or maybe I've paid off the car loan that I had and I don't have that anymore and I can't prove it. Well, we've introduced now a guaranteed benefit. So we can still do the same that we always did, where you provide proof of debt at time of claim. But we now have the ability to provide proof of debt at time of purchase. And if we do that, then that's going to guarantee up to $2,000 a month in disability benefit without any further proof. So you refinance that mortgage and it's now only $1,500 a month, but you'd already provided proof of that extra payment. We're going to give you the $2,000 to ensure that you've got it. Not integrated or coordinated, money in your pocket. You do whatever you need to do with it. It's a great way to top up those disability benefits that a client might already have without worrying about any integration or coordination.
Yeah, and it's a laundry list of debts that are covered. Everything from, as long as it's through a legitimate financial institution,
correct.
It's basically going to be covered except for credit cards.
Credit cards are the one exception, but personal lines of credit, HELOCs, mortgages, car loans, student loans, investment loans, any of that kind of stuff, leases. Business loans, all of that is covered. Like I said, easy product to put in place because you don't have to worry about it. I do want to mention, I'm going to take a step back to the Pillar Series for a second, because I should have mentioned this and I completely forgot. The Pillar Series income replacement and the Pillar Series simplified issue, accident only, also have a non-integration benefit for the first 6 months. So there's no integration or coordination with the exception of EI, employment insurance, for the first 6 months. And then it's partially integrated with a guaranteed $1,200 minimum for up to from month 7 to month 36. And then it would be integrated and coordinated after that. But it gives you that window where you don't have to worry about it. But going back to the disability rider, if you're ever dealing with somebody who's got creditor protection through the bank, really, I'm not a fan of the creditor protection that's offered through the bank. The bank owns it. The bank's the beneficiary of it. The bank controls everything on it. This way, you still own your own contract. You still maintain all the control over it. You're still the beneficiary of it. If you change lenders, you don't lose it. It's a very easy way to replace what the banks have, put something that's better, much better product for about the same premium, sometimes even a little bit lower, but about the same premium, and allowing your client to have the control. So really something that I encourage everyone to look at. Probably the easiest way to dip your toe in the disability market if you've never done it before, and you kind of get used to some of the terminology and what have you, and then can venture into the more robust plans from there.
Absolutely. I agree with you. It's a great way to pivot the conversation from life insurance to disability insurance by talking about this being a rider, something that can be added on. And let's not say riders, folks, to our clients. They don't know what a rider is. It's an
Fair.
additional benefit that's being added to the coverage. That's what it is. We can
Yeah.
call it a rider, but for your client, it's an additional benefit that comes. It usually is going to have either less criteria to qualify for in many cases, or less cost to the client. Not always, but these are options that are available, and why you would introduce it at that time in the conversation. And then you can always pivot from there to discuss the limitations of the rider, and instead pivot over to the standalone product if it makes sense for the client. So it's just a great way to change that conversation. We've had a lot of great content here today, Andrew. I really appreciate not just the support from Beneva, but specifically from you, helping our agents better understand the disability insurance market, how to have better conversations, because really that's what the Xcelerate program podcast is about. It's helping our agents accelerate their knowledge, accelerate their sales, and hopefully accelerate the experience that they're having with their clients. And I thank you again for your time, for your support all across the country at Beneva, but specifically to you as well. Thank you for all your support to our agents. We really appreciate it.
It's been absolutely my pleasure. Anytime, I'm happy to do it, and I look forward to working with Experior more.
Wonderful. Thanks, Andrew. And to everybody else, thank you for tuning in to the Xcelerate podcast with Shawn Redford. Please tune in to future sessions. We've got lots of marketing campaigns that we're going to be promoting, increasing your knowledge, increasing your expertise, and partnering with our partner companies to share their wisdom and help you grow your business. So thank you very much, everybody. Create a great day. Thanks for watching Xcelerate. I have another great video right here, so check it out. And remember, Experior Financial Group is about real people, real ownership, and real change. Let us help you accelerate your growth.